Hey, what's up, Premium Chasers? In today's video, I'm going to be showing you my 3 favorite setups that I'm paying attention to, especially over the next 90 days. Let's go. Also, one lucky commenter down below is going to win a free one-on-one option strategy call with me to hopefully help you collect your first premium with the quad option strategy. Just drop a comment and tune in tomorrow to see if you're that lucky winner. But guys, today I'm going to show you guys 3 stocks, and not your typical stocks that you see everybody mentioning here on YouTube. SoFi, Nvidia, AMD. It's like every single one of these videos are mentioning the same stocks. It's like, come on now, all right? Today I'm going to share with you guys 3 that I really like and I've been an investor in for a long time that I think are setting up really, really nicely for cash secured puts. So without further ado, let's go over the shoulder. So the first one is Palo Alto Networks, and this one got my eye today because of the fairly red open, and because literally just less than 2 months ago, it was trading at its all-time highs of 207, now trading at 174, working towards its bottom Bollinger Band, right? You could see that here, right? And this is the 200-day moving average of $179, and then this is the 300-day moving average of 170, okay? So what am I looking at for Palo Alto Networks? Well, I want to hopefully get in cash secured puts around 160, 165. What does that require? Well, that requires me, one, to be a little bit more patient as we work our way towards this 300-day moving average. Now, that's not to say this isn't still a very good setup for a cash secured put. We're going to go look on the chain here in a second on what kind of premiums are available to us today. So let's take a look real quick at the options chain and just type in Palo Alto Networks. And obviously, guys, I am not a financial advisor by any stretch of the imagination. Go do your own research. These are just companies I like. So I'm here on the options chain. I'm selling a put, and then I'm going out 35 days. And then I want to look at those 160s, 165, and you can see the premiums are actually not, they're not bad by any means, even the 160 and 165s right now. So how do you decide when to do them versus when not to? Well, you kind of get your own kind of risk tolerance, right? This, in my opinion, anything under a 300-day moving average on a company you really like and you believe in long term, getting it under its 300-day moving average, in my opinion, is a pretty good thing. So that's where I'm going to be usually looking, under the 300-day moving average. So I'm looking at this 165 right here. I'm going to open up that contract, and you could see, look at this delta. It's pretty low too. I thought that was actually going to be a little bit higher, but if you'll see it will if it still keeps dropping. But you can see delta's 0.28, so there's about 28% chance that you're going to get assigned, but about a 70% chance that nothing happens and your option expires worthless, right? Which is a good, healthy balance of occasional assignment and just premium collection, right? So right here, you see we would collect $345 from the options buyer, right, on this. So let's just quickly take a look. I always like to just throw everything into my cash secured put calculator, guys. I'm a simple man. I like everything simplified for my simple brain, right? So I like to put what my premium is that I would actually collect here, and then I have collateral of $165 times 100, so that's $16,500. $16,500. That gives me a 2.09% return on my money in a month, right? In 35 days. Annualized, I like to always look at the annualized. Gives me about a 21% annualized return if I was able to do this trade, 10 times a year. Now, obviously, that doesn't happen. Sometimes you're going to be assigned and running cover calls, all that good stuff. But I always like to shoot for that 1 to 3%, right? Obviously, it doesn't always happen. And of course, you can open up multiple contracts here. But this is a great company, in my opinion. Obviously, go do your own research. Take a look at their financials, though. I mean, look at this cash flow, guys. You already know cash flow is absolutely king here. Free cash flow is king, and I mean, they are an absolute cash cow. Obviously, a leader in network security products, which, as you guys know, I love networking and IT and security kind of products. That's some of my favorite companies, which you're going to see is kind of very niche in what I'm talking about here today. Next one is Cisco, right? Cisco is the leader in networking and IT products, routers, switches, firewalls, all sorts of good stuff, right? And it is starting to set up nicely. Now, this isn't a super volatile stock by any stretch of the imagination, right? Even though we might look at it over a 5-year period and it's big, but the price swings, it went from like a 40 to a 60, which to me, these are good solid companies where there's like a good mixture of volatility, but not such a massive movement in price, right? Which is good for us option sellers because we're able to do our cash secured puts on the way down and then do our covered calls on the way up. And then again, cash secured puts on the way down, covered calls on the way up, right? Now, that doesn't mean that this pattern is always going to follow, but, over the past 5 years, right, it shows us a pattern, right? Like there's a pattern here. Now, of course, technical analysis is BS, right? Nobody knows if a stock's going to go up or down. Nobody can tell you that. Don't trust anybody that tells you that. But for the most part, I like to kind of just follow patterns as best as I possibly can, right? So for me right now is cash secured puts on Cisco. So taking a look at Cisco. Let me refresh. Yahoo Finance has been, I don't know if you guys have been having an issue with Yahoo Finance lately, but this week it has been extra slow for me. But you could see that it is trading below our middle Bollinger Band. Let's add a couple more indicators in here just to take a look. What's our 200-day moving average, right? Our 200-day moving average is 55. Let's take a look at our 300-day moving average. And then we'll make this one a different color because your boy's colorblind. Click done. So you can see we're trading well above those 200 and 300-day moving averages, right? So these are ones where you just got to be patient. Hey, how badly do you want to own the stock? Are you okay owning it so high above the 200 or 300-day moving averages? Let's go take a look at what the options contracts are looking like. So I'll type in Cisco right here. And we will head over to our options chain, sell, put. We'll go out about 35 days again here. And we can see that the options premiums aren't even that. I mean, they're not bad considering obviously the strike price is smaller, but you're really not getting much after these 59s, right? You're not really getting much on these after these 59s. But if you're a firm believer in the company, they're still decent. So even if you did the 60s right here, right, you can see it's only a 31 delta, right? So let's take a look. You collect $85 in premium on this one. $85, and our collateral is going to be $6,000. Right, so much of a smaller play, right, which gives you about a 1.42% return on your money in about a 30-day period, which is not bad for a company like Cisco that, again, is a much more stable company. Me personally, though, I'm monitoring this company. I do believe there is going to be a big pullback as we have seen over the years with this, and I'm just waiting, and I'm hopefully want to get in like cash secured puts on the way down. A lot of people I have this conversation with is like, hey, how does this strategy work with like bear markets? Well, you dollar cost average down. It's okay to be assigned, and as long as you're doing great companies. If you're doing sketchy companies, that's your own damn fault. Why they're never going to recover. But if you're doing like companies that you love and enjoy, right? Like let's say this was the big drop. You're doing cash secured puts off of its all-time highs when it was like around 63. Let's say you got assigned around, 56, and then you got assigned again around 50, then you got assigned again around 45, right? And then you were able to then maybe do some cover calls, sell some at 50, right? Like, so like you want to be able to have the money to deploy more cash secured puts on the ride down so you get dollar cost averaging better. Yeah, unfortunately, you need money to make money. That's just the reality of the situation. Don't let anybody tell you otherwise, guys, right? Especially with selling options, the more money you have, the more money you can deploy, the more premiums you get to capture, the more you get to dollar cost average into stocks. And honestly, just the better your portfolio is going to return. It's just the sad reality of the situation. That's why like smart investors, I hate to say it, those people that are successful in their careers, that are successful in business, and they got a whole bunch of money, they should just do selling options, right? And that's why like literally I started this channel for you guys that don't even know what that means, right? Because then the unfortunate reality is like all the people that don't have that much money, like they don't have, 6-figure, 7-figure portfolios to deploy for selling options, right? What are they doing? Well, they're buying options, right? Well, they're literally gambling, right? They're gambling. And where do you think all their money is going that they're paying all that premium? They're going to the sellers, right? So like that's just my opinion on the matter, but that's the reality, right? So if you have the money to deploy and you're able to continue dollar cost average down as stocks are plummeting down, you then get to reap the rewards, right? Later on when that stock starts recovering, right? Like you would have held on to it for a little less than what if it was going down right here. like a couple months, 4 months, and then you would have been able to pretty much exit all of your positions at a profit if you really wanted to. I know it's a stock you liked, so okay, whatever. That's the point. If you already are somebody that has a higher net worth, you shouldn't be mad holding a stock that you got at a better price anyway. And then our last company, and you guys have heard me talk about it plenty of times before, is Arista Networks. And this is one of my favorites, guys. I'm going to remove this RSI. I've been having all sorts of issues with Yahoo Finance recently. But this stock still set up very, very nicely for cash secured puts. Let's refresh this Yahoo Finance again. Hopefully it works. There we go. Still trading well below its 200 and 300-day moving averages. We've been talking a lot about this one in our community. If you're not inside of our community, it's our free Facebook group. Just take a look in the description of today's video. All of resources and stuff are in there to help you out with our trackers and calculators and all that good stuff. So here's our 200-day moving average of 96, 300-day moving average of 87, trading at 79 right now. I mean, this is such a fantastic company, in my opinion, guys. They basically run the high-frequency trading networks, which is basically the stock market. It's a cash cow. If we look at cash flow and then look at their free cash flow, I mean, it is a great company that me personally, I just ride on the way. I'm gonna keep riding on the way down because I don't think this one is going to stay down very, very long, in my opinion. Obviously, go do your own research on your own on these companies, guys. Let me know any companies that you're looking at as well. Any companies that maybe you want to share with the rest of the community, drop them down below in the comments. They're gonna get you entered in to win a free option strategy call with me to learn the quad option strategy. And while you're down there, hit like, hit subscribe, and hit that notification bell. Remember, guys, sell options, collect premiums, repeat. God bless you. I will see you tomorrow.